Welcome to Lesson 8 of Week 8. Fringe benefits are the employer's costs for employee benefits beyond base salary. When you hire someone to work on your grant, the cost to your organization exceeds their salary by a significant amount. Understanding fringe benefits helps you prepare accurate budgets that reflect the true cost of personnel. Fringe benefits represent real costs your organization incurs when employing people: payroll taxes, health insurance premiums, retirement contributions, and other benefits add substantially to base compensation costs. Federal grants recognize these as legitimate costs of conducting grant-funded work. This lesson will help you understand what costs are included in fringe benefits, how fringe rates are calculated and applied, variations in fringe rates across employee categories, and how to properly budget fringe costs in your proposals. Remember that regulatory specifics and rate amounts discussed were accurate as of November 2025. Your organization's specific fringe rates should be obtained from your Grants or Human Resources Office. By the end of this lesson, you will understand how fringe benefits work and be able to calculate fringe costs accurately for your grant budgets. Fringe benefits encompass the employer-paid costs for employee benefits beyond base salary. These costs are a significant component of total compensation and represent real expenses your organization incurs when employing people to work on grants. Common components of fringe benefits include FICA, which is the employer's share of Social Security and Medicare taxes. Health insurance premiums paid by the employer are typically a major component. Retirement contributions, whether to defined benefit pension plans or defined contribution accounts like a 403(b), add to fringe costs. Other benefits may include life insurance, disability insurance, workers' compensation insurance, unemployment insurance, and tuition benefits. These are real costs that your organization pays when it employs someone. If your grant budget does not include adequate fringe benefits, your organization subsidizes those costs from other sources. Proper fringe budgeting ensures grants pay their fair share of the true cost of personnel. 2 CFR 200.431 governs fringe benefit costs on federal grants. This regulation establishes that fringe benefits are allowable when they represent reasonable costs incurred in accordance with established organizational policies. Your organization's fringe rates should reflect actual benefit costs and be applied consistently across all funding sources. Fringe benefit rates express the relationship between employer benefit costs and base salaries. Understanding this rate concept enables accurate fringe budgeting. The rate is expressed as a percentage of salary. A 30% fringe rate means that for every dollar of salary, the employer pays an additional 30 cents for benefits. Fringe rates typically range from 25 to 40% or higher, depending on the benefits package offered. The rate is calculated by dividing total fringe costs by total salaries. If an organization pays $10 million in fringe benefits for employees earning $40 million in salary, the fringe rate is 25%. This aggregate calculation produces a rate that can be applied across the organization. Application is straightforward. Multiply salary by the fringe rate to get fringe cost. If a position has a project salary of $50,000 and your fringe rate is 30%, the fringe cost is $15,000. The total personnel cost for that position is salary plus fringe, or $65,000. This example illustrates the significant impact of fringe benefits. Adding 30% to personnel costs substantially increases your total budget. Failing to include appropriate fringe costs results in under-budgeting that creates problems during project implementation. Fringe rates aggregate multiple benefit components into a single percentage for budgeting convenience. Understanding what goes into fringe rates helps you appreciate their magnitude and variations. FICA includes the employer's portions of Social Security and Medicare taxes. As of November 2025, the employer pays 6.2% for Social Security on wages up to the wage base limit, plus 1.45% for Medicare with no wage limit. High earners may trigger additional Medicare tax. These statutory taxes apply to all employees. Health insurance is often the largest fringe component. Employers typically pay significant premiums for employee medical coverage, with amounts varying based on plan type and whether coverage extends to family members. Health insurance costs have increased substantially over time, driving up fringe rates at many organizations. Retirement contributions represent employer payments to pension plans or defined contribution accounts. Some organizations provide matching contributions to 403(b) or 401(k) accounts. Others maintain defined benefit pension plans requiring employer funding. The specific contribution level affects the fringe rate. Other benefits contributing to fringe rates include employer-paid life insurance, disability insurance, workers' compensation insurance, unemployment insurance, and tuition benefits for employees or dependents. Each component adds to the overall fringe rate. Fringe rates often vary by employee category because different groups receive different benefit packages. Using the correct rate for each position ensures accurate budgeting. Full-time versus part-time distinctions often affect fringe rates. Full-time employees typically receive comprehensive benefits, including health insurance and retirement, resulting in higher fringe rates. Part-time employees may receive limited or no benefits beyond statutory taxes, producing lower fringe rates. Faculty versus staff distinctions may create different rates at academic institutions. Faculty might have different retirement contributions, different health plan options, or additional benefits like sabbatical accruals. Staff benefits packages may differ, resulting in a separate fringe rate. Student employees often have substantially lower fringe rates. Graduate students may receive tuition remission, which might be budgeted separately. Undergraduate student workers typically receive only statutory benefits with minimal fringe rates. Some institutions set student fringe at 0 or near 0%. Using the correct rate for each position is essential for accurate budgeting. A budget using the full-time staff rate for all positions, including part-time workers and students, would overstate fringe costs. Conversely, using lower rates for positions that will actually be full-time employees understates true costs. Using your organization's official fringe rates ensures accuracy and consistency. Understanding how to obtain and apply these rates supports compliant budgeting. Your grants office or human resources department is the official source for fringe rates. Do not estimate or guess fringe rates. Use the rates your organization has established. These rates should be documented and available to anyone preparing grant budgets. Rate documentation should show what the rates are, which employee categories each rate applies to, and when the rates are effective. This documentation enables consistent application across all grants and provides audit support if rates are questioned. Rates may change annually as benefit costs change. Health insurance premiums typically increase each year. Retirement contribution levels may be adjusted. Use current rates when preparing budgets, and update ongoing projects when rates change. Some organizations may be able to request revised budgets or supplements when fringe rates increase substantially. Some organizations, particularly those with significant federal funding, negotiate fringe benefit rates with their cognizant federal agency, similar to indirect cost rate negotiations. These negotiated rates provide additional assurance that rates are reasonable and properly calculated. Organizations without negotiated rates should still document their rate calculation methodology. Budgeting fringe benefits follows a straightforward process once you have salary figures and know applicable rates. Walking through this process ensures you include all necessary fringe costs. Step 1 is calculating project salary for each position. As covered in the personnel costs lesson, multiply annual salary by percent effort to get project salary. Do this for every position on your budget. Step 2 identifies the applicable fringe rate for each position. Determine which employee category each position falls into and apply the corresponding rate. A full-time project coordinator might use the staff rate while a graduate student assistant uses the student rate. Step 3 multiplies salary by rate to get fringe cost for each position. If the project coordinator's salary is $40,000 and the staff fringe rate is 32%, the fringe cost is $12,800. Calculate this for each position. Step 4 sums fringe costs across all personnel to get total fringe for your budget. Add up the individual fringe calculations to get the total that will appear in your budget's fringe benefit line. This total represents the full employer benefit cost for all project personnel. Multi-year projects require attention to how fringe costs may change over time. Planning for these changes ensures adequate resources throughout your project. Fringe rates may increase over the project period. Health insurance costs typically rise annually, putting upward pressure on fringe rates. While you cannot predict exact future rates, assuming some increase is prudent for multi-year budgets, salary escalation also increases fringe costs in later years. If you budget 3% annual salary increases, fringe costs rise correspondingly even at a constant fringe rate. A $50,000 salary at 30% fringe costs $15,000. At $51,500 in year 2, fringe costs $15,450. Budget planning should consider both rate and salary changes. For a 3-year project, year 1 might use current rates and salaries. Year 2 might assume 3% salary increase plus 1 or 2% higher fringe rate. Year 3 continues the escalation. Building in reasonable growth prevents budget shortfalls. A conservative approach budgets slightly higher rates for out years to provide cushion. If actual rates are lower than budgeted, you will have a modest surplus that provides flexibility. If actual rates exceed budget, the conservative assumption limits the shortfall. Consult your grants office about appropriate escalation assumptions. Different types of compensation may have different fringe treatment. Understanding these variations prevents budgeting errors. Regular salaries receive the standard fringe rate for the applicable employee category. This is the typical situation for most personnel on your budget. Apply the appropriate rate to base salary calculations as described previously. Overtime and supplemental pay may have different fringe treatment depending on organizational policy. Some benefits apply only to regular compensation, not overtime. Other benefits like FICA apply to all wages. Your organization's policies determine how to handle fringe on non-standard compensation. Consultant and contract payments do not receive fringe benefits because these individuals are not employees. Consultants are responsible for their own taxes and benefits. Including fringe on consultant costs would be an error. Ensure your budget clearly distinguishes employees from consultants. Summer salary for faculty typically receives the same fringe rate as academic year compensation. The employee receives benefits year-round, and summer salary continues generating benefit costs. Apply your standard faculty fringe rate to summer salary budgets unless your organization specifies otherwise. Proper documentation supports fringe benefit charges and protects your organization during audits. Building good documentation practices ensures you can defend your fringe costs if questioned. Rate documentation should include records of approved fringe rates, their effective dates, and which employee categories each rate applies to. Having official rate documentation readily available simplifies budget preparation and audit response. Calculation support through worksheets showing how fringe costs were calculated provides transparency. For each position, document the salary amount, the fringe rate applied, and the resulting fringe cost. These calculations should tie to your budget figures. Policy documentation describes your organization's benefit policies and how they translate into fringe rates. What benefits does each employee category receive? How are rates calculated? This documentation helps explain why your rates are what they are. Audit preparation means being ready to explain and defend fringe charges. Can you demonstrate that rates were properly applied? Can you show that rates reflect actual benefit costs? Can you explain variations across employee categories? Anticipating audit questions and having documentation ready makes compliance review straightforward. Several common errors affect fringe benefit budgeting. Recognizing these mistakes helps you avoid them in your own proposals. Using the wrong rate applies an incorrect rate to an employee category. Applying the full-time staff rate to graduate students overstates costs. Applying student rates to professional staff understates costs. Match each position to its appropriate rate category. Omitting fringe entirely on personnel costs is a fundamental error that significantly understates your budget. Some inexperienced budget preparers focus on salaries and forget that fringe benefits add substantially to personnel costs. Every personnel position should include both salary and fringe. Applying fringe to non-employees like consultants or contractors treats them as employees when they are not. Consultants are responsible for their own taxes and benefits. Including fringe on consultant costs inflates your budget and demonstrates confusion about employment relationships. Using outdated rates when current rates have increased understates your actual costs. If your organization's fringe rate increased from 28% to 32%, using the old rate leaves you short. Always verify current rates before preparing budgets. Organizations with significant federal funding may negotiate fringe benefit rates with their cognizant federal agency, similar to indirect cost rate negotiations. Understanding this process provides context for how rates are established. Negotiated fringe rates are agreed upon through a formal process with the cognizant agency. The organization documents its benefit costs and calculates rates that the agency reviews and approves. Once agreed, these rates provide a defensible basis for fringe charges on all federal grants. The rate proposal process resembles indirect cost rate negotiation. The organization prepares documentation showing benefit costs by category, total salaries by employee category, and calculated rates. The agency reviews, may request additional information, and ultimately agrees on rates documented in a formal agreement. Benefits of negotiated rates include certainty about acceptable rates and protection during audits. If your fringe rate was negotiated with your cognizant agency, auditors reviewing a grant from another agency should accept that rate. Negotiated rates demonstrate that rates have been scrutinized and approved. Organizations without negotiated fringe rates use documented institutional rates that reflect actual benefit costs. These rates should be calculated following reasonable methodology and applied consistently. While not formally negotiated, well-documented institutional rates generally satisfy federal requirements. Fringe benefits are integral to total personnel costs. Understanding this relationship helps you plan realistically and communicate effectively about project costs. Total personnel cost equals salary plus fringe, representing the fully loaded cost of employing someone. This fully loaded amount is what your project actually costs your organization, not just the salary figure. Budgeting should account for total cost. Budgeting perspective should focus on total cost, not just salary. When evaluating whether you can afford a position, consider the fully loaded cost. A $60,000 salary at 30% fringe costs $78,000. That total determines what your budget can accommodate. Communication with stakeholders should help them understand true personnel costs. Principal investigators focused on salary figures may be surprised by how fringe affects their budget. Helping project leads understand fully loaded costs enables better planning and resource allocation decisions. When comparing costs across options, use fully loaded amounts for accuracy. Comparing one position at $70,000 with lower fringe to another at $65,000 with higher fringe requires calculating total costs for each. The lower salary might actually cost more when fringe is included. Following best practices for fringe benefits ensures accurate budgeting and supports compliance. These practices should become standard elements of your budget preparation process. Use official rates obtained from your grants office or human resources department. Do not estimate or assume rates. Your organization has established rates that should be used consistently across all budgets. Using unofficial rates creates inconsistency and potential compliance problems. Match rates to employee categories by applying the appropriate rate for each position type. Graduate students get student rates. Full-time staff get staff rates. Faculty get faculty rates. This matching ensures your fringe calculations reflect the actual benefit costs for each position. Document calculations by keeping worksheets that show how fringe was calculated for each position. These records support your budget figures, enable review and verification, and provide audit documentation if fringe charges are questioned. Plan for changes by budgeting conservatively for multi-year projects. Assume some rate increase in later years. This conservative approach provides cushion if rates rise more than expected and ensures adequate resources throughout your project period. Let us summarize the key points from this lesson on fringe benefits. Fringe benefits represent the employer's costs for employee benefits beyond base salary. These costs typically add 25 to 40% or more to salary figures, representing a significant portion of total personnel costs. Including appropriate fringe ensures your budget reflects the true cost of personnel. The calculation is straightforward. Salary multiplied by fringe rate equals fringe cost. Obtain your organization's official rates, match rates to employee categories, and apply the math to each personnel position. Sum individual fringe costs to get your total fringe benefit budget line. Variations across employee categories mean different rates may apply to different positions. Full-time employees typically have higher rates than part-time workers or students because of differences in benefit packages. Using the correct rate for each position ensures accuracy. In our next lesson, we cover travel policies and budgeting. Travel is a common budget category with specific rules about allowable rates and required justification. Understanding travel requirements helps you prepare compliant budgets and manage travel expenditures properly during your project. Practice exercise. Calculate the fringe benefit cost for a position with a project salary of $45,000 using your organization's fringe rate. What is the total personnel cost including both salary and fringe?